What's up guys, my name is Nox. Welcome to the very first episode of How to Trade Market Maker Models. In this series I'm going to break down my entire trading model step by step so you can understand exactly how I analyze the market and why I take the trade I take. So I'm starting with the very basic concepts because if a beginner lands on this series, I want them to be able to watch only the content that is on my channel so that they don't have to go here or there to find explanation. So today we're beginning with a key concept, which is fair value gaps or FVG. So let's jump right into it. You can see on the left an example of a fair value gap or an imbalance, and it's basically a 3 candlestick pattern where the high of the first candle does not overlap with the low of the third candle, and it basically creates a gap between the two candles here. So imagine that you guys are bullish on the daily time frame. You want to see price come down into these fair value gaps and go up after price reach into them. So that will give something like this. I will give you and show you live example after that, so you will have a clear understanding. Moving on to volume imbalance. So this is a 2 candlestick pattern where the close of the first candle does not overlap with the open of the second candle. So you can see here on the fair value gap that the close and the open are overlapping each other, but on a volume imbalance the close and the open are not overlapping each other, and this creates a volume imbalance. And now for a gap, the high of the first candle does not overlap with the low of the first candle, and you can see that there is literally nothing in between the two candles. And the difference between a volume imbalance and a gap is that there's nothing here, so this means that there was no trading in between the candles. But here you can see there is a wick here, and that means that there was trading, so trading happened in here. Now for bearish examples. So first the fair value gap. The low of the first candle does not overlap with the high of the third candle, and if you are bearish on the daily, you would want to see price to reach up into the fair value gap and go down again. So that will be something like this. Now for volume imbalance, that's the same thing as before. So the close this time on a bearish candle, the close of the first candle does not overlap with the high of the second one, and you can see with these wicks here that there was trading inside the volume imbalance. And for the gap, the low of the first candle does not overlap with the high of the second candle, and there is once again no trading in between the two candles. Now for live example guys, we are on Euro USD. This is a daily chart, and I will give you and show you examples of bullish and bearish fair value gap. So before I mark out the chart, I would like to give you some time to find these examples. So find bullish fair value gaps around here and bearish fair value gaps here. So just click pause on the video and come back once you found them. So the first example is here. You can see that price created a fair value gap here. Price came down into it and pushed straight higher. The other example is here. You can see that we came down just a bit inside and went up again. The third one is here. There's a little fair value gap, but there is one. You can see if I zoom in, this low does not overlap with this high, So that's another fair value gap. And now for bearish examples, the first one is here. So price creates a fair value gap with these 3 candles. Price came up, then went down, and that's another example here of a fair value gap. For volume imbalance and gaps, this is the first example. So you can see we are on NQ, and that's the first example of a gap. So there is nothing in between these 2 candles, and this creates a gap. The second example is here. There is nothing in between these 2 candles, and this creates a gap. And now for a volume imbalance, this is an example of a volume imbalance. You can see there was trading between the candles, but the bodies are not overlapping each other. So this is a volume imbalance. And at the beginning of the week, we had another gap. So here and here. Oh no, sorry, it was on Friday. But yeah, we had a gap here. So price created a gap, came down here, inside it, and then push straight higher. I hope you guys found this video insightful. If you learned something new, make sure to leave a like, subscribe to the channel, and write a comment down below. And I will see you soon for the episode 2.